Morning traders. So let's have a look at the DOW. I've got the weekly chart up on the DOW at the moment, just so we've got the broader picture of what's going on. Remember yesterday I spoke about this range bar here, and we're looking for a break to either side. So the top of the range bar is there, and obviously the bottom is there. We're looking for a break to the upside. A break to the upside will bring this level up here into play. Let's get down to the daily. So still, we can see 200 EMA is still holding up price quite nicely. We are sitting between Kijinson and Dickinson, and they are flat, which is indicating that we are ranging. So you can see we are ranging. Cloud is flat as well, which is also an indication of a range. So ideally what you want to be doing is looking for entries at the bottom of the range to go long, and you'll be able to take a short at the top of the range. There's nothing really standing out on the daily that I'd really want to play. And similar to the Aussie and actually the S&P and also the NASDAQ have got the same patterns, which is your left shoulder, your head, and your right shoulder forming at the moment. So on the 4 hour, you can see we have broken through the cloud. The price has broken through the cloud once, twice. We do have a bullish crossover here, which is still in play, even though that we're pointing to the downside. You can see how the 200 EMA on the 4 hour has offered resistance, and it's been like that since the 21st of March. So you can see how well the 200 EMA is respected. And what we have here we have another range bar there. Okay, so this whole thing here is pretty much a range. So you can see that there. So I'm referring to this bar where the cursor is now. That's our range bar. So we are sitting in slap bang in the middle of this range at the moment. There's nothing really else. So if you'd taken the trade yesterday, as I said, somewhere in this zone here, then you'd still be in without too much hassle. So the flat cloud here would have been an entry, and it's a 260 point stop loss. Just point of interest here, if you were to take a trade here on the bounce off the Kijinson, your stop loss should actually be below the cloud. So that's typically the way ichimoku works. But a lot of the times, let's say you took that trade there, you need to be below the cloud, which was 490 points, which is quite a big stop loss. So I tend to look for closer a stop loss where I can add at a closer point to price than where it is now. And I think let's just get down to the hour. Okay, so again, from a Kijin perspective, you can see we've had a Kijinson crossover here, and now we're grouping together, possibly for another crossover, which would be to the upside. But at this stage, we are inside the cloud, which is ranging. The sickle span is inside price to the brown line here, which is just going flat with price, and that also indicates a range. So we are ranging on the 50% of this range, this mini range that we have here. So a break below here will bring this level into play. Okay, a break above this, probably be safe and take this pin bar here. will bring this level into play. Okay, so that's kind of the play at the moment, and I think the way I'll look at this afternoon is to see how Europe handles the Open, and hopefully we'll be able to get in somewhere in this area. Okay, so lastly, let's just point out there's a flat cloud there, which will offer some support, and you can see how it has offered support already. And we've got the 200 EMA. We've had a crossover of the 50, 100 and 200 EMA as well, all pointing are flat at the moment, but they are in a bullish formation. In other words, the 200 is the lowest, then the 100, and then the 50. And normally when you see that, let's just find and you see here when it's 50, 100, 200 pointing to the downside, you can see the bearish movement, and when it's pointing the other way, typically it is bullish movement. I don't have much there. Maybe find something further down. Well, there you go. So you see 50, 100, 200 pointing to the upside, and price gradually moves to the upside. So at this stage, I mean on the 15, you can see it even clearer how moving averages are flat. Everything's flat. We're in the cloud. There's just zero movement at the moment. Okay, so this was also probably a wait and see scenario. And there is another pattern that's formed here. I think let's just get rid of all of this. Everything. I'll just point this out here. You can probably take it all the way back from there. Yeah. Okay. So you can see we have a triangle forming, and this is so typical of a triangle. You see that everything just comes to a grinding halt. Momentum comes to a grinding halt. And we tend to go sideways, right slap bang at the apex of the triangle. You see there's the apex there, and you see our price gradually just does this until it gets somewhere in this zone. It will either break to the upside or break to the downside. And often it does this when you are in the cloud. And if I just slap the Bollinger on here, let's see what I mean. See how we are right in the middle. This dotted line in the middle of this purple cloud is the 20 EMA, the 20 simple moving average, sorry, from the Bollinger perspective. And you can see how price is right in the middle of Bollinger in the triangle. So this is a classic breakout pattern forming. So it's something worth watching, and you'll see a break either side. And what may happen is that it'll come down, test the bottom here, or test the top of these tails, come back into it, and then only break out. And this is where I do like to look at the Bull Williams, because it'll give you an indication of which direction it's going to go pretty early on. But for now, we're ranging, so it's a wait and see scenario for me. Anyway, guys, I hope that helps, and happy trading. I'll catch up with you later.